How's it going, everyone? It is Sunday, March 31st, and this is the end of the month. So we're going to look at our picks from the entire month. We're going to go through all of them. We're going to see how we did. We're going to see what worked well, what didn't work well, and what we can take away going into the next month. So this is all live. I've kind of marked out how they are in my chart, but I haven't actually taken a look at them until right now. So this is a pretty live reaction here. So first one, we're going to start on 3-1, which was DG. So you can see that we had a nice breakout in DG, I believe on the first, and was into the gap as well. So it broke through here, confirmed to the gap through the 200 SMA, and we took profits on the gap fill as it approached right here. So that was a pretty nice win. As you can see, it continued forward, but because it was a shorter term trade, we had our profits at resistance and we had earnings coming up. So we wanted to see what that earnings reaction was. So DG still looking pretty nice, but as you can see, we'd like it to get above that earnings candle before we get anything crazy over here. What was the market doing on the first? Let's get our bearings over here. So on the first, the market had made a new all-time high. That's when we took the trade. You can see as the market pulled back, DG actually surged ahead. Really nice volume here, excellent continuation. That's some amazing relative strength on DG. So that was a nice win. NFLX, we had a shorter term swing. We also took this on the first. We had this really nice breakout over here. Some nice steady price action. And then you can see how NFLX didn't really have the follow through that we wanted. Right? The market started to flatten out over here from the 19th, and so did NFLX. It started to flatten out a little bit. So we adjusted our bias. We're going for, maybe a 1 ATR move on here. We could see that it was starting to gain some support on this trend line that I've drawn in. So you're getting a little bit of cheating over here. And then we took profits, kind of on this gap up, as we knew it would rub up against this trend line. So we took profits on the 21st for $10 profits. We got in around 619 or 619, 618 would have found a support. I think we added a very tiny amount to the share because it was finding support during any signs of market weakness, and then it started to surge a little bit higher, and we got a pretty nice win on that. So stock didn't do exactly what we wanted to do, but we adjusted our expectations. Now let's look at spot. So we took spot on the first, and I think we took profits pretty much the next day. It made our move. So if you remember, we actually took spot in February, pulled back, made another leg higher, and I was like, you know what, this is a pretty nice entry. So I took profits and I actually re-entered, and then I got another nice leg of profits on Spotify. So excellent win on that stock. So it was a nice way to start off the month. Next one we had was our PCS. So broke out over here. We took the PCS, the 88, 87 PCS, fell down below, so we took some heat, and I didn't like this because it was back in the range. Stock ended up getting back above the range, which we'd like to see, so it tells us that buyers are strong, and then we got a nice leg higher, and then on the 22nd, this stock expired worthless, and you get the full credit on MS. So this is a tricky one, and I think in hindsight, it probably wasn't my best pick only because I didn't confirm this breakout and then to take this additional heat. So for me personally, I actually closed this before the FOMC meeting, because if you look at what the stock was doing in the FOMC meeting, it was a binary event, and the stock hadn't really done what I wanted to do. It was pretty much teetering right around this level, right around my breakout level. So if I was a little bit more, wasn't unsure about the market price action, I felt there was a chance that we could pull back. If I pull back and we're in the final week of expiration, my spread is 0. So I said, hey, let me take a small win on MS and get to the sidelines, because I don't have any more cushion on this PCS with expiration and a binary news event. So I was fine with I took this trade knowing that the FOMC, could cause some reaction either way. I'm okay with that. But if the trade didn't produce and I have no cushion, then I have less latitude to stay in the trade because my original thesis was proven incorrect. Now you could say, hey man, you really should have just held until FOMC and you would have gotten, your full credit. And it's like, yes, that's correct. But it's a 50-50 chance now, right? Instead of getting this green candle here, if we had a negative reaction and we blew through here, now I'm taking a max loss, right? So I'm taking it's a 50-50 probability in either way, but my risk reward, my risk is far greater than my reward, and that's not how we trade the put credit spreads. We want a much higher probability of success for that risk reward to be a profitable expected value. So that's why I got out of the trade. So I missed some money, but I think my reasoning was fine, and I think I would have done that again if that situation presented itself. All right, TMUS. So we took this put credit spread right here. Same thing. You can see a pretty common pattern. We had to have a nice breakout, but we didn't get the confirmation. I did like TMUS, and I thought it had pretty nice, you know, not the craziest price action, but there's a lot of support at this level. So I took the, I believe the 160. Oh yeah, and you can see here I broke through, I believe on March 15th. So I took this spread right here, the 162.50. It broke through that level pretty much right before expiration, which is very unfortunate. You know, happens. It's part of the deal. But I think this bearish engulfing candle was a warning sign. Stock has found some longer term support over here. So you'd have to go pretty far out of the money, but it's not a very relatively strong stock. So I don't think I'd even take the PCS here. So I think my mistake in this again is not waiting for that confirmation. I think you take it here, wait for this pullback, and because of this selling pressure is pretty strong, you would actually never have a chance to put on the spread. I'd rather get the spread on a stock with more kind of defined support. So I don't think my picks on MS and TMUS were the best ones, which is why I didn't end up being as profitable. Okay, IBM on 3.6. Let's see. So this is 3.6. So you can see IBM at a pause here, nice breakout, and I believe it actually had broken through this prior day high. And you can see how it didn't end up confirming above this high on a daily chart basis. Let's look at the market on the 6th. Market on the 6th was finding a little bit more support, and IBM was very strong. So it was a pretty nice pick here, but we know that this is some major earnings support. We had a pretty steep reaction at this candle if you look at the intraday chart. And we waited, and then we actually got out for a break even on the next day here on March 12th, because we knew that it wasn't really going as expected. And the market was getting a little bit soft. So here's IBM on March 12th. Here's the market on March 12th. So we're still kind of moving up, but we're seeing a lot more red selling. And IBM not quite doing what we wanted it to do. No follow through again on this candle. So that's a break even we took there. All right, ASML. So took it over here. And I think looking back, what is this entry point on the 7th? So this was a nice move. Here's the market on the 7th. So it's moving up higher. So I think we're kind of still trading with the market. The context is still looking bullish. This stock broke through compression. Was an excellent setup, but maybe got a little bit ahead of itself. It went a little bit parabolic. We got a bearish engulfing candle, and that is the first loose. So I think we had a half short swing, half long swing, and then because we got on this bit of a parabolic move a little bit late, took the L over here, going up over higher, but you can see the trend hasn't been very strong on the stock. I think it's probably got to work off some selling pressure, and it's something that we probably want to buy a dip on. So ASML, I don't think I would take this setup again looking back at the chart, just because it's a little bit of a reach on a stock that has gone up a lot, right? This has made a huge move, and after a nice run, there's chance to take in gains. So I think if the only thing I would do is maybe you could take a small starter position, and then if you take the L and the bearish engulfing candle, or you take the small loss on a starter position, I think that's how I would play it in the future. But you know, not the best pick, happens, and then you get out of the trade, and you don't have to worry about all this trade management bullshit, right? And you can even look, even if you exit it out here, right, that's basically a scratch, you know, on what it was over here. So you save yourself all this time of doing all that nonsense. All right, so ASML was an L. Let's look at Snow. Snow has some nice shorting opportunities over here. So we took Snow on 3.8. This is a nice breakdown over here. So if we look at Snow on 3.8 and the market on 3.8, so this was a Nice bearish engulf off the all-time high at the time. Snow was post-earnings bear. Very, very weak. And it had broken through and closed below this so the short-term support level around the 6th and the 7th. So we took a nice quick overnight swing win on this stock, and it showed us that one, there's some more opportunities coming up on the short side, and the market is still bullish, but there is the price action getting loose. So we have a few, like I said, a few more picks on the short side available. So Snow was a nice win. GRMN, we didn't end up getting the trade off. It's really funny. I think I was right here, and I was like, this is a pretty nice price action. I'm like, I'd love to get it to like 150, and it gets pretty much up to 150. So it kind of took off without us. We missed the trade, and we're like, hey, we're not going to chase. We're going to wait for the pullback. GRMN's looking good now. It's digesting some of the gains. I think it can go higher, but this stock doesn't make explosive moves, right? So we didn't want to be caught chasing. Like, imagine buying here, and you have to wait through this entire pullback to get back in on the trade. Just not something we really want to do. So what I would do, so end up being a no trade. That would have been a nice win, but you know, again, you don't want to. We want to be confident with our entries, and even if we don't trade GRMN, we can still get other wins. All right. So 312 now. We had LI on March 12th. So here's March 12th, right? So stock rebounds, finds some support of the SMA, and we're starting to grind up higher again. The LI chart is not honestly the best chart. I really just was more taking it for the day trade chart. I traded it late in the day. It was a decent run. So looking back, I don't think this was a great trade because it wasn't the D1 quality that I wanted to. And the good thing is I didn't hold it overnight because I knew that it wasn't a great D1 chart. I didn't have the latitude to carry it overnight. And you can see that was a correct thesis because very, very weak. And, you know, I don't like to do any overnight stuff with Chinese stocks. It's very, very choppy and gappy D1. Not exactly something that I want to trade. So yeah, LI I think was not my best pick because it wasn't a great D1 chart, but it had pretty decent M5 price action. The mistake I made on the day trading chart, I believe, is that I added on a day where the market was getting pretty dead, and we didn't have too much to go on. So let's see what I can do on March 12th, and let's just take a look at LI on March 12th, and we'll take a look at SPY on March 12th. So for day trades, takes a little bit longer because you really got to get those intraday charts. Okay, and I actually know what March 12th looked like because I know how to have traded some pretty decent price action. All right, so remember, this is why I liked LI over here. A really strong move. The market had found support. LI was grinding up higher. I knew this would only be good for a day trade. And when the market found support, entered LI over here, and then stock pretty much did nothing throughout the rally. So what I should have done is probably exited for a scratch. I had no latitude to add because I added too quickly in the market. I didn't get any actual stock confirmation to add to the position. So in hindsight, I think the entry was fine, but I didn't have the stock price action confirmation to add to this trade. So LI was something that, you know, there was a trade management mistake in this one. So we're going to actually and I'm keeping an eye on these errors over here so I know exactly what is going wrong in the losers and what's going well in the winners. Okay, 313, we had LIN. So this was a long swing. Let's look at LIN until then. So this is the price action for LIN on the 13th. Let's look at the market on the 13th. Okay, so market holding the gains. It's looking decent. It's not looking amazing, but it's not looking terrible. LI has really strong price action, so we took a starter position on the 13th. And it's not too extended from its 8 EMA. I think it's a pretty decent move. I think this is a more ideal entry point because it's earlier in the move. But I think it's just, I don't think it was a terrible entry in my opinion. Stock was doing okay, so pulls back a little bit with the market. Over here, I think it was a CPI. This probably was maybe I think it was actually PPI. I think we had CPI somewhere over here, and then PPI. And the next day, there was a lot of volume and volatility there. This pullback was perfectly fine on the 15th. This bearish hammer was another, not the most ideal sign, but I don't think I would have been able to scratch over here. A lot of heavy volume in that candle. I believe it was only 1 day. And then the price action was doing like okay. It was compressing. But here was the warning sign that I saw. Market starts to rally. We break out to a new all-time high on the 20th. I mean, what does LI do? LI doesn't do anything, right? It's pretty much completely dead. So we took the small loss on a starter position on a long swing because LI didn't produce, right? It should have been rallying up with this market, and it did not. So I don't need to be getting into my long swing at that point. You can see how it's been slowly grinding down lower. It might find support at VWAP, at AVWAP-Q. And then maybe rally higher. The stock has appeared at moving up and then compressing and doing nothing for a while. So I'm really not crazy about taking this entry point. What I'll do right here, just set a good cancel alert on this downward sloping trend line. When we get a nice bullish flag, then I could probably take a nice shorter term swing and make some money on that trade. But I'm totally fine with taking the loss there. I think that was the right move to do in this situation. Okay, ENPH. So favorite stock here, March 14th. This was a really great day trading setup. So first, really choppy D1 stock, but it is bearish, right? There's a bit bearish bias. And on these sideways stocks here, you want to get in on the middle of the range, right? That's where you've just established support or resistance and you're still in the meat of the move, right? Like somewhere here in the middle of the range, and you can take nice profits when this starts to wane up and probably sell into strength. So over here, you had a pretty nice entry point in the gap. Clear target at the SMA, and now it's starting to move up higher, right? And which is fine because again, you're only day trading this position. There's a long-term trend line coming into play. That's a pretty nice long-term trend line, and it looks like this is in a pretty decent wedge. So I don't really wouldn't really do anything until it breaks out of this wedge. And I actually sent an alert on both these wedges over here. I think that'd be an excellent entry point on this trade. You can get some very nice day trading opportunities because this stock can move. So what was going on that day, March 14th? Here's March 14th. So looks like very barely staying in the market. I think I remember this day pretty well. Let's go over to the SPY chart. Let's go over to the daily chart here. So let's first get into ENPH was 314. Oh, it was Pi Day. All right. Oh, yes. Okay, it must have been this day. Oh, yeah. Wow. It's a nice looking bearish chart. Okay, so nice drop over here. As the market rallied, ENPH didn't do anything. Wonder what... Oh, I think this is the 200 SMA now. Yeah, this probably was not there at the time because I don't think we would have taken the trade. But you can see as the market rallied over here, right, starting to go higher, we knew we were still bearish for the day, and ENPF was hogging the low of the day. So I think when it made its break over here at the low of the day around 1050, 1055, we took the trade. Now the market started to go higher, but ENPH didn't go as high. So I remember when I took the trade, I entered here and I took profits here. Okay, so I missed a big chunk of the move. Now I was looking back at this trade and I was saying, all right, I did win on this trade, but was there any way I could have, was there any real reason to stick to my thesis? The main thing that made it difficult to stick to my thesis is that the market was pretty volatile today, and this was a pretty decent move to the high. So I'm actually going to go back to the market M5 chart on that day, see what 1OP was saying, see what the price action was saying versus a SPY overlay, and let's get a really much better comparison of how we could have done better on this day trade, because we left some money on the table. I think we took a PDS over here, and I took it pretty decent, like 15, maybe 15% on the PDS over here. But I mean, my original target was this SMA, and I missed it. So, you know, what was, are there any clues that I missed, or did I make the right decision on this day? Okay, so big red candles over here, and you can see really choppy price action. So I think our market confident at the time, we got this 1 OP cross right over here. This bearish cross around 11. That's probably where we took the trade right here at 11. This 1 OP cross. So I think my entry point was pretty good in the trade. My market bias was mildly, yeah, I think over here it was a little bit more mildly bearish. And I think I don't know if I entered at the low of the day of this candle or not, but we did get a bearish engulfing candle. So entered at 11, and the stock was kind of going flat over here. Let's see what the market did. So market is really choppy, and so I think my market confidence at the time was very, very low. I didn't have a lot of latitude to stay in the trade. So I think on my M5 confidence, or sorry, my D1 confidence in the market was probably like a 2 in the shorter term, or maybe a 1 because we're kind of reaching a toppy point. But my M5 confidence is probably a -1, given that we had a huge drop, which was kind of over exaggerated. We got this green candle on heavy volume. We're preserving the halfway point, which I liked, but there's still a battle going on here, and I didn't really know which side we're going to break. I can see already, I'm pretty sure I drew a wedge on this day as well to see which way we would kind of break through it. So market's making its move down over here to low of the day, and then we get a nice long green candle at 12.20. So let's see what ENPH does over here. So it does make a new low of the day. Starts to rally a little bit with the market. And I think this was when I wasn't a fan of this trade, because the market started to go down at 12.55 and ENPH started to go higher. And I was like, all right, that's not what I wanted to see. It was still giving me lots of relative weakness at this time if we kind of go bar for bar, right? Like this is a nice move, okay? And then this candle kind of gets gobbled up, which I didn't like. So I'm understanding why I didn't really like this pick. Took a little bit of heat on here, but I was like, it's fine. You know, I'm still expecting sellers to come in, and I should have a shot to get out at the low of the day. So we get this long red candle here at 115, and I'm pretty sure that's where I took profits. I'm not even sure if I waited for this green bar, because we got the attack of the low of the day. I didn't believe it would hold, given that we had all the buying pressure. So this is where I took profits. So I think I don't know. I think I understand why I took it. It was because of 2 reasons. My market bias was not as bearish as I wanted to be for a day trade. It was probably a -1 bearish. My stock bias started out as a -3 bearish, and then it pretty much became to a 0, right? Like it's pretty much going flat here. We haven't really made any moves, and I don't really know if we're going to make a new low of the day or not, or a higher low, because I had this strong move over here. It wasn't the strongest move, but it was a bit longer than I would have liked and did not sync up with the market. So that's why I got out of the trade. So I think this is a pretty fine trade. What I would have said, though, is I would have set another alert on ENPH and waiting to see if I got the right entry for the market. And now you can see later in the day, at 12.50, we have an excellent entry point over here, because ENPH is looking very relatively weak. So sellers have returned to the stock. This was a temporary bounce, and you could have stayed the course, and you would have been rewarded when it starts to break the low of the day. All the way here, maybe 230, 235, you could take a starter position. On ENPH, we got a pretty decent response. Double top, lower high at 12.45. Yeah, and you could definitely take another leg of profits on this move down, and I would have stayed in this trade until the market seemed to find support, and ENPH found support. So over here, I would have been taking profits at 330. Right, market has a kind of a bit of a bullish hammer over here. We're starting to loosen up over here, so you're taking a nice chunk. So I think my ENPH day trade was good. I liked the reasoning that I did behind it, and I think it would have saved me on more losers than missing out on these winners. It's a bit of a choppier beast. So I think what I would have done is just got my money, set an alert, and then re-entered the trade once I got the confirmation that it's still good. because based on what I saw over here, it could have come up with the market, and I would have just been kind of, you know, just like shitting my pants because I'm just taking all this heat in these really choppy market conditions. We had some volatile chop here. All right, so that is the other one. And then I took Google on this day. So Google was the day trade of the day. On the 12th, Google had a nice bullish chart here. Or sorry, the 14th, my bad. And I remember this setup pretty well. And the key, I think, to day trading this day is recognizing that it was volatile chop and being a little bit more, basically having the market plan in mind. So I know the Google has a nice break of the SMA. It held up all the way through the market to the market day. We entered on this HA reversal, broke through over here at 120. Let's look at 120. Google was doing very, very well. We got a pullback. We got this HA reversal at 150. You can see what the stock has started to do. Market starting to do at 150. Broke this downward sloping trend line. So you could have a pretty nice short-term trade on Google. It is bearish engulf, so I think you could even take profits on this bearish engulf here, or ride it up and take profits on this, or sorry, bearish hammer, then take profits on the second bearish engulf at 250. So you have to say, okay, as long as the market doesn't make a double top and we start to hold VWAP, that's what I want to see to stay in Google on the market side. So it pulls back. This is okay. This is okay. Google's performing. And you say, okay, market broke through VWAP. We can't hold. Sellers are returning here. We're getting some 1OP bearish cycle. I'm going to get out of Google because there's still a bearish bias in the day. So that was the opportunity on Google. So I think that was the play that you got to do. But pretty decent day trade went. So 315, we didn't get a pick. 318, we took PEP. We took PEP. So if I look at PEP on 318, nice breakout over here. Lots of volume. I think it was not the bestie one that I loved, but there was enough tradable volume on that day. And let's go back into this M5 chart on the 18th. Okay, so here was PEP. So with PEP, I believe that we took it fairly later in the day. Yep, so here's the market, fairly bearish. I think we probably took PEP, let's see, probably in the high of the day break. Had a pretty strong pullback, which didn't like. We waited for the response, and then I think we took the L closer to the end of the day. PEP could end up being an overnight winner, but we didn't have the stock D1 chart to lean on that, and our particular bias was the day trade. So I think the clue for the day in PEP was the fact that we made a really big move early, and this is a consumer defensive stock that doesn't really move. The second part of it was that we had an early move in the market, and then it pretty much just died. Like, it didn't do anything, right? So what I've noticed in these LPD days is, like, you have stocks that are like looking good, it's holding up pretty well, it's making its move, and then they'll just die because they run out of steam in the first half of the day, because the buyers kind of, you know, are very strong earlier and maybe very strong later, but the middle of the day is where it gets a little bit low volume. It loses some power, loses some momentum, and there's no trend or market tailwind to at least keep it afloat. So if you have a really late day entry at the high of the day on these really dead days, I mean, stock is going to pull back so much because it's really unlikely that it's going to be kind of screaming for new all-time highs when you enter on these breakouts. So what I should have done on PEP, probably sent LSI alert. I don't think I would have entered here because the selling was pretty strong, and the market was below VWAP. So I think how I would have traded PEP is to find the strong stocks, and okay, so market makes a new high of the day. 10:15, we have a 1OP bullish cross. What's PEP doing at 10:15? Okay, So making a pretty decent move. It's gone pretty parabolic. So maybe you could take a starter position here. I don't think I've actually would have taken this trade in hindsight, but let's see how it would have played out. So my bias is that we have a potential to make a nice, clean, bullish trend day. We have a gap up and we preserve the gap. So we're ending up higher. Now market's pulling back a little bit. So we want to see this bullish cycle continue to produce. Okay, so bullish cycle is holding on pretty well. It didn't really produce, which we don't love. It's now 11 o'clock. So let's see what PEP is doing at 11 o'clock. So it's gone a little bit higher. It's holding pretty flat. But the market's not giving a lot of tailwind. So as long as PEP sticks with its own strength, we can now lead into our stock. But our bias is a little bit less bullish because we didn't get any production at this level. We needed this bull cycle to produce, and it didn't really produce. And now we have the bear cycle that is coming up. So we want to hold VWAP. That's fine. So we're coming over here. 11.10 is looking good. 11.15 isn't the best, but it's also not the worst. We still have a bullish hammer. We'll try to poke back above. And then this candle was pretty much a tell at 11.30. So let's look at this stock at 11.30. Okay, it's losing its luster, and the market is going down. So if you entered here, you'd probably exit here for a very tiny win on PEP. And why are you doing this? Well, this bearish cycle is producing, and PEP is not really doing great. It's not really doing great, and it's a half position. Your market bias was wrong, and you want to see what this next bullish cycle is going to bring. So I think that's one exit point that I would do. As soon as it starts to pitter patter and the market doesn't find support, right, that is the warning candle. I would like to see if PEP had held up another bullish hammer here or compressed at the high of the day, I could have stuck with it. But over here, it tells me, hey, I'm going to get out of this position. So market's still pulling back, and you might say, okay, well, PEP still found some support, and it started to make a new high of the day. So actually would have taken, I mean, let's say you still managed to stuck with it, there's your second exit point at 12.30 on this bearish hammer. And then you can see here, we barely make a new high of the day, and then it's pretty much dead. So the key here was the early entry point, and there's really no market opportunity for me to exit PEP, even on this bullish cycle here. At what, 12.45? Here's PEP at 12.45. It was decent, but we just did not have the market conditions to perform in this trade. So PEP was a market and stock M5 mistake. Okay, let's look at GE on the 19th. GE. I need a longer term swing on this as well. Oh yeah, that's some beautiful price action. So we know GE was already a strong D1. We don't even need to look at that. So GE, I believe I called out this trade sometime over here. 11.50, stock made a new high, and then when it started to lose relative strength towards the market, you get out. So we got it from here, got it from here. That's a nice chunk of profits for a day trade. How could this have been better? That's my real question that I'm looking at. So spied a gap down, formed a double bottom, and then it made a new high at 5.12. So we're getting a little bit across. You probably could have entered at 10.40. What did GE do at 10.40? All right, we broke through the high of the day. Right, this is some decent price action. Volume is okay, but I really like how it found support far earlier than the market and it started to rally before this. So you take a small starter position and you say, all right, I want SPY to continue on this bullish cycle and see if we can add to these gains. SPY over here, here's SPY at 12.25. Okay, so now it's compressed. What did GE do during this time? So as SPY compressed, GE pulled back a little bit and then started to surge higher. So here's it at 11.25. Here is, we entered here. I don't know if I would add here. I think it's not my most confident add, but I'd probably wait for another pullback over here to add to the stock. And you can see it surged even higher. All the gains over here, and I'd probably add at this point at 11.50 as the market continues to produce. So add over here at 11.50. So enter here, pull back, add. So this is what I like to see. Use continuing higher. 12.10. Let's look at the market. Okay, So it's kind of pitter-pattering here, so we're still sticking with it. We know that there is some selling pressure, so want to continue to see this bull cycle produce. We get a nice long candle at 12.15. All right, I mean, doesn't scream higher. That's fine. I don't need it to scream higher. Stack another one. Stack another one. All right, this is looking really, really good. So market makes new high of the day. We want to see a bearish cycle here before adding to the position. Continues to scream higher, and now GE is taking a little bit of profit taking at this point. This is 1240. This is 1240. Pull back to the EMA. I'm not too overly concerned because when a market makes a really strong move like this, a lot of stocks are going to show relative weakness, right? Like they're just not keeping pace. It's probably driven by a very few select amount of stocks that are actually making this strong move at the moment. So this point is fine. So market going over here, testing this prior day high, which are where we are aware it's a key level. So here's it at 1 o'clock. Okay. And we have a little bit of a short-term high. This is a nice bullish cycle, and we expect buyers to come in and step in. So here's it at 105. I think GE is still looking pretty good, but it's getting pretty loose. So if you want to take some partial profits, I think it's pretty doable. When you entered here, you got a really nice chunk of the move. That's $2. Market's pulling back. It's holding this level, and we expect it to hold that level, and we don't want to see a double top. So we're looking at the market here, some signs of a double top. Let's take a look at what GE is doing at this moment, and it's not really rallying with the market here, right? You can see it's compressing while the market is making this double top higher. So you have your clue. I mean, honestly, even before this 150 candle at 145, right? Here's the 150 candle, here's 145. I mean, you could take profits over here, and I think that's where I'd enter. LRSI came a little bit earlier. And I think the 145 candle was the clue where we're not seeing this strong move, and the 150 candle is the confirmation at this point. Set alert to re-enter on the trade, right? You got some nice profits. There still could be another leg in here. So you set an LRSI alert. All right, it gets triggered here. Not the best entry point. You don't want this bear bar. You want to see some stacked green candles, so you don't enter here. You get another one over here. All right, this is a pretty good entry point if you want to get maybe a shorter term swing. You can get in on that, and then you have a nice leg of profits on the next day. So even though GE was a win, there were opportunities here to enter better. I could probably add, I mean, here I'm not as sure, but I think I could definitely add once this trade, and then you take profits when it loses its relative strength. Okay, NRG we didn't take. Lift is still open. Let's look at our NVIDIA CDS. So we took this on 322. Nope, went past it. Okay, so here's our NVIDIA CDS. Okay, so why do we like it on 322? Well, here's the M5 context. We've got to look at the D1 context first. Okay, so 322, we had held the gains. Market's pulling back a little bit, but NVIDIA was looking pretty good, and I think there was an opportunity for the short-term swing. So our D1 market bias, I think, was still bullish at this point. Our D1 stock bias was 3, and our M5 bias was also 3, because NVIDIA was very strong today. You can see how the market was going down. When it found some support, NVIDIA is also a choppy stock, so we say, hey, we're going to set a pullback alert. When it finds a nice support level, we're going to enter CDS and take a nice move. So I think we took like 35% profit on that stock. Was a really, really nice win on that trade, and we took into strength. We got a nice win. So I think that was a play I'll take again, given that it's a very short-term trade, and we knew that the stock strength could propel it for a short period of time. Last one that I have here that was actually a, looking at closed trades here is APA. So I called that APA. I took it on this LRSI pullback here, and I said, hey, look, you can do two things. You can target this high of the day, or you can target a little bit higher, right? If you want to have a little bit more latitude at this time, it was on the 25th. So here's the 25th. What's the market doing? It's still pulling back, right? So we don't want to have a longer term thing. So if you took the very, very shorter term time frame, you could have made money. If you're like, hey, I'm going to wait till a little bit longer, here's the pullback here, no follow through. We gap above here, and then we have a bullish engulf, and you have another exit point at this point right here on the 28th as the market starts to rally up. So APA could be a small win if you had the right strategy. All right, so those are all the trades that we went. So overall for this month, I had 23 picks is what it looks like. I hope I did my math correctly. 10 wins, 5 losses, 1 break even, and 6 open. So now these stats are not as good as what happened in the last 2 months, right? January, we were 16-3. February, we were 17-2. So what changed? Why is my stats not the same as the last time? So there are 2 main reasons. The first is the market conditions have changed in March, right? Let's look at a monthly chart. So a monthly chart is actually, it's actually harder to tell. Maybe let's look at a weekly chart. Okay, right, so look, here is February, pullback, February, March, and then we get the move up in March, right? So most of March, we didn't do anything. We did most of January. January moved up, February we moved up, March we flattened a little bit. So market conditions have changed. They got a little bit looser. And I also did not give as many short swing picks. My short swing picks this month, I believe, were, and in the count that I've taken, in my own personal count, which sometimes matched these and sometimes didn't. In my put credit spreads and short swings, I was 12 out of 15. So 12 wins, 3 losses. So the second reason is I'm giving different picks. I'm giving day trades. And I'm giving longer term swings. And these are things that I'm actually not that great at and I need to work on. And part of me working on those areas is me giving out picks, standing by them and reviewing them, right? Like, you know, I might look back at the LI trade and be like, yeah, why would I add there? It was such a dumb mistake. But I need to have those trades and learn from them in order to get better. Where I'm at right now in my trading, and I mentioned this in some other previous videos, is that I need to have many tools to become a successful trader. Right now, my main tool is short-term swinging, right? Get an excellent entry point, sell it into strength, and that has worked really well with shares, and I'm able to profit on that with deep in-the-money calls, expiring a month out, 0.75 delta, and they're capped at 5% of my account to, mitigate any emotional and trade management kind of risk for that stuff. But short swings don't always work. And, in the event over here where we're getting this kind of choppy action, right, and we're getting some dead action, you have to pick your spots for these short swings. I don't want to be taking short swings on these new all-time highs. I want to be entering on these pullback here, right? And let's just draw some of these here, right? Here's first entry, all right? I'd want to enter there. Where's the next entry point? Okay, here is decent. Maybe you can enter here. And you can see how the pullback entries are not doing as great as they were before because we're not getting the follow through, right? We're not getting the trend that we need to see. I'm just outlining some of these on the chart. All right, entry, pullback entry, makes a new high. And so now we have some more open positions because we're not getting the market tailwind. You can see the spacing between some of these candles here. Right? So look, pullback moves up, and we get the follow through, pullback, right? You get another test. So this is a little bit of a dip, follow through. And I mean, look at some of these ones earlier on. And I want to mark these because I think this is important. On these excellent entry points when the price action is so much tighter. All right, almost done here. Okay, mark them up for a bit of a while, right? Go over here. Bit of a pullback, but not great. You maybe enter here. Take some heat on the 20th. I think that's fine. It's not the worst. It's really not the worst entry point. Stock above the prior day high, closing. Still get some follow through. So there are some entry points along the way over here. Market had a bit of a consolidation period, tighter price action. Right, so there's all the kind of entry points I'm seeing over here. And you can see how it's just going sideways. You're not getting the follow through here. So less short-term swings that I've been able to take. And I need to lean on more premium selling strategies. So get better at my put credit spreads. And even stick with my longer-term picks. But also seeing if there's potential for me to day trade, right? Where it's tough when we have these compressed intraday ranges and they're going against it. So this is not the best condition to day trade. Really, we want these nice trend days for our day trades. But just finding opportunities in these days. So if I look at my core strategies, I didn't compromise on those. Those still did great. But if I look at how we did on the day trading side, we had some more variation, right? We had some more, some not as great picks, some mistakes that we made along the way. So what can I learn from this? What can we learn from March so we can go into April, right, being successful? So the first thing is my short-term swings, I think, are good, right? I'm not changing how I approach them. The important thing is I enter them at the right time with the market, and I always put the market first on the short-term swing. For my put credit spreads, I need to have really nice D1 charts. So sometimes I compromise on my D1 charts because I'm really trading. I'm looking for stocks that are not insanely bullish, like go bullish, because that would warrant a more aggressive strategy. But also stocks that aren't just like super choppy and they don't break down. And to me, the key with these put credit spreads is, again, entering them on the market support level. So if I enter them here and I take a lot of heat, right, I have a bad entry point to put credit spreads because I'm not getting them on a market after market pullback, then there's more chance for them to fall because I'm going to enter them at not a great point. They go against me. I don't have any cushion, and I have to get more involved in terms of the trade management, which is something I don't want to do because put credit spread should be a very low managed, low maintenance trade. So I need to pick better D1 points and I need to pick better entry points on my put credit spreads, right? The same entry points on short-term swings, that's when I'd put on a put credit spread because market has found support. I'm going to get some tailwind and some liftoff in my stock that's already relatively strong, and I can ride that out for a little bit of time. So I'll give a great example of that actually, which was NVIDIA over here, right? When it found support on the 22nd. So this stock was pushing up higher. I got it on the put credit spread. Lots of easy, and there's a pretty easy setup. There's a strong trend in the stock and it's flattening out. And there's two things I need to have. We have a nice technical breakout, and this compression is very nice, and a very high IV and a clearly defined support level where if I need to leg out, it's a very easy decision to ride the short put all the way down. I could ride it down to like the 50 SMA, right? So to me, this is a far better put credit spread setup than something like TMUS, which has not been in the strongest trend over here. And I didn't even confirm really this breakout on the spread, and it's a lot more of a choppier stock. So yeah, that's what I think with my put credit spreads. In my day trades, this is something I'm working on, of entering well and setting my expectations according to what the market is doing and what the stock is doing. So reviewing these day trades has helped me got a lot better. But also I know that I need to put in some more work in really entering well, in managing the trade well, and also setting my scenarios for SPY. I want to give a good example of a day trade I'm actually pretty proud of over here, and that was COF that I took on Thursday. So first, I came in. We have this nice move over here on Thursday, and we want to see if this move is preserved during the bear cycle, right? So we're watching this bear cycle. It's going through, right? We're holding the move here. We're starting to creep up higher. We're getting this 1OP cross at around 1045-ish. So in this time, I'm looking for very strong stocks as it's pulling back. COP, excellent breakout over here. Strong D1, good volume today. I looked at the price action. It was one of the stocks I marked. And this was the stock as I took it at 1055. So I took it right here. Okay. So 1055, to me, the market has found support. Here we have a 1OP bullish cross and a benign bear cycle. So I laid out my scenarios. I said, hey, if the market is able to make a new high of the day, I'm going to add just and hold it, by the way, hold it. So I want to see a close above the high of the day and then a second close on the next long green candle. I'm going to add to COF. If the market is range bound, then I'm not going to add to COF and I'm just going to ride out the move until it loses steam, exit the trade, and then set an alert. So go bar for bar, right? Market's kind of doing nothing and COF starts to power higher. And I'm like, all right, I got a good entry point at the break of the high of the day. This is a great setup because we got a gap up. I liked how it pulled back and tested the gap. And then we saw nice, steady buying on heavy volume all the way up here, breaking through the high of the day. I like this pullback because it showed me that we still had a lot of room to go, and I got a nice entry point rather than the stock just going screaming screaming higher. So starting to go up here, and then I'm looking for the right candle, and this 1130 candle to me was very key because at this 1130 candle, this started out breaking through the high of the day as a nice green bar, and in the last minute it finished as a bearish hammer. So at this point, I'm seeing the trend strength. You know, it's still looking good, but my market bias has now shifted from trend day to range bound day, right? This bull cycle didn't produce. We have a bearish cross. Not as crazy about the market. So I actually exited here at 1130, and it was pretty good. I liked everything about the trade, but there was one mistake I made here, and this was the mistake. So at this point, I'm saying, all right, I will not be adding to this position, and I'm looking for it to weaken. So it does not weaken, right? Market goes down. All right, if it weakened, then I would have been out of the trade. Has not weakened. Market goes down, still strong. Okay, so I'm still sticking with the trade. Okay, green candle here. Okay, we get a red bar. I'm not worried about one red bar, but if we don't get any movement soon, then I'm out, right? We start to move higher, start to compress. The stock pulls down a bit, and at this point I said, I'm out, right? You could have said, hey, well, market could go higher, blah, 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 blah. No, it's still in a range-bound day. We have not made a new high of the day, and I do not believe we'll make a new high of the day at this point. So I'm out of the trade, and I set an alert. And I said, hey, look, if this stock has an HE reversal or an LRSI endpoint, I'm here, but we have not gotten any movement in the market today, and I don't need to stay in this trade longer than it did. So everything was great. The exit was good, but it could have been a little bit better. Now let's see what happened later in the day. COF pretty much did nothing. Pulling back over here. Got a couple LRSI alerts, but nothing great because the market is still going absolutely nowhere. And stock finally climbs higher, I believe at the end of the day. Nope, yeah, it closes here by the end of the day. So you can maybe take it here. That seems like the other entry point. Like a little bit higher, a little bit higher. Here I wouldn't have taken it because our market bias, again, right, was wrong. You can see what happened here. Market pulled back 1230, just going nowhere. So, and I knew that this is a day, if the market is range bound, COF is going to lose steam and it's going to compress. How did I know that? I knew that because I looked at PEP. Because I knew that I made this mistake on PEP, I learned from that and I said, hey, I'm not going to make the same mistake again on a stock like COF because the move is going to happen early in the day. It's going to run out of steam. If it pulls back and moves again, then I'm in it. If not, then I'm fine because I took nice profits on a shitty market day. Thanks everyone for listening. This is a pretty long video, but I think it's important because I am still learning, obviously. We had some good picks. and I went over my thought process for my day trades, my swings, and so on. So my focus for April is I want to continue first doing my short swings, you know, and you know, try to get a consistent stream of profit over there and good stats. Follow my setups. So focus on that. But the main thing I want to learn is my day trading and really get better at the day trades that I make, because I believe that day trading is not the best strategy in every market condition, but it is viable in every market condition. Whereas if you take something like long-term swings, they're only really viable in bullish markets, which is not a bad thing, because 80% of the time we're in a bullish market. But if you go horizontal, if we're in a bearish market, you can't really take those longer term swings. So if you're only a short-term swing trader or a longer term swing trader, you have no options in those bear markets. If I'm able to trade these bull markets and day trade here, I can really take advantage of the extra volatility in bear markets, and I have something to lean on and something I'm confident on, right? If instead of just only leaning on put credit spreads or longer term swings. So I want to have these couple strategies in the bag. Short-term swings, which deep within the money calls, which I have. Put credit spreads, which I'm good at, but I could get better. Day trades, which are okay, but need a lot of work. Debit spreads, which are a nice shorter-term strategy like we saw in NVIDIA, especially with like very expensive stocks. I'm able to get a nice chunk of the move. So debit spreads. And I guess long swings would be fifth, right? These deep swings like we took with, I think Abbott. Might have been Abbott. Is it a 113? Yes, it was Abbott all the way over here. So right, Abbott was a nice long swing. Some parabolic swings like VST took it here, got out over here, right? GE we're still in, and this was a really nice one. You can see a nice little bearish engulfing candle over here, but you know, took it over here, still riding this move up. Excellent move. And you know, getting better at those. So a lot of things here, but the main thing is I'm trying to focus on my day trading. So for the next couple of videos, you may still get some more day trading picks. But it's always harder to review them because you really got to get in the intraday chart. So that is the March video. So decent month, but a lot of things we can improve on. Thanks for listening, everyone. I know it's a very long hour video, so you can put it on like double speed or something. But I'll catch you all tomorrow for our usual market video.